Economic growth in the UAE will pick up significantly this year and in 2018, driven mainly by growth in the non-oil sector and higher crude oil prices. According to a new report by Fitch Group company BMI Research, on a regional level, the UAE will be one of the outperformers among the Middle East's oil exporters given its diversified economy, huge financial reserves and enormous infrastructure plans. The report's authors stated that they believe government cutbacks in spending have largely passed and are particularly optimistic on the construction sector. BMI is forecasting real GDP growth of 2.8% in 2017, a notable uptick on an estimated 2.2% growth in 2016. The report said that oil prices are expected to average $57 per barrel this year and $60 a barrel next year. Another boost for the UAE economy will come from the construction sector as preparations gain speed for the World Expo 2020 in Dubai, with BMI expecting new projects to be launched and construction at ongoing or stalled projects to be expedited. Last month, the Institute of International Finance, a global association of financial institutions, said confidence is gradually returning in the UAE economy as non-oil activity is picking up, with consumption spending expected to rise in the second half of 2017. The MENA region continues to be the most underinsured region in the world, both at a consumer and corporate level. That's according to the speakers and experts who gathered at the inaugural Dubai World Insurance Congress. The fourth industrial revolution, driven by macroeconomic trends and rapid growth of technological evolution, was a key area of focus during the Congress, which attracted over 200 delegates from the insurance sector representing 45 different countries. The two-day forum aimed to address the challenges of growing voices of protectionism throughout the world and the industry's outlook considering the innovation gap. According to the speakers from DIFC, banking and insurance industry in the region are heavy consumers of data, and despite its wider availability, the insurance sector in particular has failed to capitalize on the information. The speakers added that fintech was an emerging area that insurance providers should embrace, particularly due to the mass urbanization and the growing young population and mobile population of the region. It was added that a consumer-centric approach with customized plans and convenient services should be a priority for insurance providers to meet the consumer demands.
Insurance is a big industry, so the interest that we're seeing in innovation is across the value chain, ranging from firms that are looking at artificial intelligence, to analytics for risk pricing, to distribution, to mobile solutions. Much like financial services, that interest is spread across multiple parts of the value chain. Everyone knows that there is pricing pressure and there's premium pressure globally. There's also excess capacity. So what innovation is going to do is a couple of things. One is it's going to drive efficiency, regardless of whether you're an underwriter or you're a broker. The other thing it's going to do is it's going to improve customer experience, and so that'll help our insurance stakeholders' businesses. When it comes to some other trends that are driving innovation, underlying all of this are macro trends such as young, mobile, upperly mobile, urban populations in the Middle East, all underpenetrated for insurance, all looking for financial services and insurance solutions.
Usage of devices such as telematics was discussed as an emerging technology which can be useful for insurance companies to adapt to the new economic order. While sharing the experience of using the usage-based devices, or essentially a vehicle black box, the founder of Connected Insurance Observatory highlighted a range of benefits. It was added that around 20% of vehicles in Italy have installed the devices, which allows insurance companies to offer customized plans while also saving costs and time through a quicker settlement.
In Italy, there is more than 6,500,000 cars with a device provided by the insurers. It's close to 20% of the auto insurance market in Italy. So that took 10 years, more than 10 years to arrive at that stage of maturity. But that path that the market did allow now to see concrete results, facts and figures. And what is impressive is that telematics, so a sensor that registers the driving behavior, is able to select risk, allow the insurer to select risk. Telematics portfolio, on average in Italy, have 20% less claim frequency than the non-telematics portfolio. Another evidence, the best practice are using the data coming from the car to improve the claims management. I will talk today in my presentation about that result. You have a reduction of 6% of the average cost of claims due to the ability to challenge the client, to challenge the body shop about the cost of repair the car.
Total Islamic banking assets in the UAE have increased to approximately 520 billion dirhams in the past few years. That's according to Saif Hadif Ash-Shamsi, the Assistant Governor for Monetary Policy and Financial Stability at the UAE Central Bank. Ash-Shamsi added that Islamic banking's assets account for around 20% of the 2.6 trillion dirhams of the total assets of the state's banks, noting that there are 7 Islamic banking and financial institutions operating in the country. The Assistant Governor pointed out that UAE Islamic banking institutions account for about 7% of the total assets of Islamic banking around the world, which approximates around a total of $1.5 trillion. Islamic banking deposits increased by 42% over the past 3 years compared to an 18% growth rate in conventional banking institutions, and that lending by Islamic banks increased by 54%. And Emirates NBD has been named the UAE's most valuable banking brand with a $3.4 billion valuation. The banker's annual brand valuation league table ranked the Deyaar Bank among the top 100 global banking brands, coming in 75th, up from 96th in 2016. Last month, the bank announced the launch of Live, the UAE's first digital bank targeted at millennials, as part of its planned investment of 500 million dirhams towards digital innovation and multi-channel transformation over the next 3 years. In addition to its brand engagement, the banks delivered a solid set of results for 2016, with the net profit up 2% from 2015 to 7.24 billion dirhams, driven by asset growth and higher recoveries, which helped offset lower interest income.